You're losing money if you don't invest in the stock market. Many people avoid investing because they're afraid of losing money or don't have time to learn how to invest properly. For these people, ETFs were created. ETFs are indexes made up of dozens, hundreds, or even more assets, designed by professionals to generate returns. All you need to do is buy them through a brokerage account. There are many different ETFs, such as S&P 500 Index, ETFs focused on high dividend yields, and ETFs consisting of bonds. The first index, the S&P 500, represents the entire American economy. It includes over 500 of the largest American companies, such as Apple, Google, Facebook, and others. These companies generate millions of dollars in profits every day. Why not get a share of their profits? All you need to do is choose an ETF that tracks the S&P 500 index. Here are some ETFs that track this index. Each one has a different price because they're created by different companies, but they're almost identical in terms of their holdings. The only thing to check is their expense ratio. To own these ETFs, you pay a small fee, which varies by ETF. For example, my favorite S&P 500 ETF is VO, which has an annual expense ratio of only 0.03%. This means if you invest $10,000 in this index, you'll only spend $3 to own it. Historically, this index has provided investors with a 10% annual return, meaning that investing $10,000 could earn you $1,000 per year. You're getting much more than the $3 you paid for it. The second type of index focuses on high dividend yields. These ETFs include companies that regularly pay out dividends to their investors. They also have expense ratios. For example, VYM is one of such ETFs with expense ratio of 0.06%. Imagine investing $10,000 in this ETF and receiving money every quarter. The last type of index consists of bonds. Bonds are securities issued by the government to borrow money. You lend your money to the government, and they pay you back with interest. Here's a list of bond ETFs. Personally, I hold BND, which has an expense ratio of 0.03% and a dividend yield of 3%. So, which index should you choose to earn money? If you want to build wealth for buying a house or just to have more money in the future, the S&P 500 index is the best choice. Just buy this index every month and hold it for 5 to 10 years. If you already have significant capital and want to receive regular payments instead of working 9 to 5, an ETF focused on high dividends is a good option. These ETFs offer stable and increasing dividends year after year, meaning you'll get more money each year. If you're afraid of losing money, bond ETFs are a safer choice. These ETFs have very low risks, and if you want higher returns than what a bank offers, this is your pick. Banks use your deposited money to buy bonds, earning more than they pay you in interest. So why keep your money in a bank when you can directly buy bond ETFs and earn more? It's a myth that you need to be an expert to make money in the stock market. You just need to buy one or even all three of these indexes. If you had invested $10,000 in each of these indexes 10 years ago, today you'd have $32,000 from the S&P 500 ETF, $25,000 from the high dividend ETF, and $11,900 from the bond ETF. None of these ETFs have lost money for their investors. So why worry about losing money in the stock market or not having enough time? All you need to do is go to your bank, open a brokerage account, and buy one of these ETFs. In 10 years, you'll have extra money with minimal effort. If you invest $500 monthly in the S&P 500 index, you could have $1.14 million in 30 years. I understand 30 years may seem slow, but think about it. Do you know another way to become a millionaire? Start a business or win the lottery? If you know how to become a millionaire, why haven't you done it? Winning the lottery is rare, and starting a business is challenging, but anyone can buy an S&P 500 ETF. Just wait a bit. You don't need a huge initial investment. With today's options, you can buy a fraction of any index for as little as $50. Once you see your assets grow and regular dividends coming in, you'll want to invest more. You might start with $50, but soon you'll invest $500 or $1,000 each month, and your investment period could shrink from 30 to just 20 years. You can change your future today. Just buy an ETF, and it will do the work for you. Subscribe to my channel so you don't miss my videos.